Welcome to our deep dive into the world of tokenized assets. We're talking about taking real-world assets like real estate, art, or even private companies, and turning them into digital tokens on a blockchain. Today, we'll explore how tokenization is revolutionizing investing and making high-value assets more accessible. We'll cover what tokenized assets are, how they work and why they matter, and I'll even walk you through how you can start investing in them. So, buckle up, hit that subscribe button, and let's get started. What is tokenization? Imagine you own a piece of real estate. Could be a rental property, could even be a whole apartment complex. Now, traditionally, selling a property like that can take months, involve tons of paperwork, and come with hefty fees. But with tokenization, you can convert that property into digital tokens on a blockchain. Think of it like dividing that property into tiny pieces, and each token represents a fraction of ownership. Here's how it works. First, you need to select the asset you want to tokenize, like that rental property we talked about. Then, you establish a smart contract, which is basically a self-executing digital agreement that outlines all the rules of ownership for those tokens. Once the smart contract is set, you create the tokens on a blockchain, and each token represents a specific ownership percentage of the underlying asset. And the best part? These tokens can then be traded on specialized platforms, kind of like buying and selling stocks. This whole process makes it way easier and faster to buy, sell, and invest in high-value assets that were traditionally out of reach for many investors. And that's what makes tokenization so powerful. What are tokenized assets? Now that we understand tokenization, let's dive into what exactly tokenized assets are. Simply put, they're digital representations of physical or financial assets stored securely on a blockchain. We've already talked about real estate, but think bigger. We're talking about anything of value: stocks, bonds, fine art, classic cars, you name it. Even intellectual property like patents or copyrights can be tokenized. Imagine owning a fraction of a Picasso painting or a rare vintage Ferrari. That's what tokenized assets make possible. These assets are stored on the blockchain, which acts like a digital ledger that records every transaction, ensuring transparency and security. This means no more worrying about fraud or middlemen taking a cut. And the best part? Tokenized assets can be traded 24/7, anywhere in the world, with lower transaction fees than traditional methods. It's like having a global marketplace right at your fingertips. Why are tokenized assets important? Okay, so we've covered what tokenization is and the types of assets that can be tokenized. But why should you even care? Well, tokenized assets have the potential to change the entire investment game. Here's why. First off, they make traditionally illiquid assets way more liquid. Think about it. Real estate, art, private equity, these are not things you can easily cash out on a moment's notice. But with tokenization, you can trade fractional ownership of these assets much more easily, just like stocks. Second, tokenized assets increase accessibility. Not everyone has millions lying around to buy a painting or a high-end property. But with tokenization, you can invest in fractions of these assets with a much smaller amount of capital. It's like democratizing investment opportunities. And then there's transparency and security. Blockchain technology ensures that all transactions are recorded and verifiable, reducing the risk of fraud and manipulation. Plus, with tokenization, you have direct ownership of your assets without the need for intermediaries. How do tokenized assets affect crypto, investing, and everyday life? This is where things get really interesting. Tokenized assets are not just some abstract concept. They have the potential to impact the crypto world, the way we invest, and even our everyday lives. First, tokenized assets create a bridge between traditional finance and the blockchain. By bringing real-world assets onto the blockchain, we're opening up a whole new world of possibilities for DeFi. or decentralized finance. Imagine being able to use your tokenized real estate as collateral for a loan, or earning interest on your tokenized art collection through DeFi lending protocols. That's the power of tokenized assets in the DeFi space. But it goes beyond that. Imagine a world where you could invest in a basket of tokenized assets that represent a diversified portfolio of real estate, stocks, and commodities, all with a few clicks on your phone. That's the future of investing that tokenized assets could unlock. And in our everyday lives, tokenized assets could simplify things like property ownership, inheritance, and even supply chain management. It's about making things more efficient, transparent, and accessible for everyone. Pros and cons of tokenized assets. Now, before you go all in on tokenized assets, it's important to understand both the amazing potential and the risks involved. Let's start with the good stuff. We've talked about the advantages: increased accessibility, improved liquidity, transparency, security, lower costs, and faster transactions. These are huge benefits that can't be ignored. But like any investment, there are also drawbacks. One of the biggest challenges right now is regulatory uncertainty. The world of tokenized assets is still relatively new, and governments are playing catch-up when it comes to regulations. This lack of clarity can create some volatility and risk for investors. Then there are the technology risks. Blockchain technology is generally secure, but it's not foolproof. Hacks and vulnerabilities can happen, so it's crucial to choose platforms and projects with strong security measures in place. And of course, we can't forget about market volatility. Tokenized assets, just like cryptocurrencies, can be subject to price swings. It's essential to do your research, understand the risks, and invest only what you can afford to lose. How to invest in tokenized assets. All right, so you're ready to dip your toes into the world of tokenized assets. Here's a step-by-step guide to get you started. First things first, you need to choose a platform. There are a growing number of platforms that specialize in tokenized assets, each with its own fees, features, and asset offerings. Do your research, compare options, and choose one that aligns with your investment goals. Once you've chosen a platform, you'll need to create an account. This typically involves verifying your identity, similar to opening an account with a traditional brokerage. Now comes the fun part, selecting your investments. Browse the available tokenized assets. And remember, diversification is key. Don't put all your eggs in one basket. When you're ready to invest, you can buy tokens just like you would buy stocks or cryptocurrencies. The platform will typically guide you through the process. Once you own tokenized assets, you have a couple of options. You can hold on to them long-term, hoping their value appreciates, or you can trade them on the secondary market to potentially profit from price fluctuations. And remember, this is still a relatively new space, so it's crucial to stay informed, do your due diligence, and invest responsibly. The future of tokenized assets. So, what does the future hold for tokenized assets? Well, I'm bullish, to say the least. Here's why. We're already seeing growing institutional adoption. Major financial institutions and even governments are starting to recognize the potential of tokenized assets. This influx of institutional capital could be a major catalyst for growth. And it's not just about real estate and art anymore. We're seeing an expansion of asset classes being tokenized. Everything from renewable energy to intellectual property to collectibles is fair game. As the industry matures, we can expect more regulatory clarity, which will further boost investor confidence and drive adoption. And here's where it gets really exciting. The integration of tokenized assets with DeFi is still in its early stages, but the possibilities are endless. We could see a future where tokenized assets become the building blocks of a more open, transparent, and accessible financial system. Of course, there will be challenges and bumps along the way, but the potential for tokenized assets to revolutionize how we invest and interact with value is undeniable.